Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Ben Rains, and we're bringing you two top number one stocks in very different industries and with very different valuations, but both of them are hot. So what are they looking like going into 2021, both of these companies? Let's take a look first at my stock. I'm doing one of the home builders. Yes, I'm still on the home builders kick, but they're reporting still, and it's been phenomenal. Let's take a look at Lennar. LEN is the ticker there. They're one of the top home builders across the United States, in most states, and they do a lot of entry-level buildings, so they're a good barometer about what's happening out there with home buying. And yeah, we all still want to buy homes. Everyone is still rushing out. There's still a supply-demand imbalance. There's too much demand, not enough supply, and that's a great time to be a home builder. But let's take a look at Lennar's earnings estimates and see what's going on there, and you'll get a whole clearer view on the picture once you see what these numbers are. So Lennar just reported its fiscal 2020 fourth quarter earnings and full year, and now it's switching over into fiscal 2021. And as you can see here on this line, this is the sales growth that is expected for 2021. They are expecting to build a record number of homes. They have a record number of the backlog now, with everybody, plopping down their earnest money and hoping to get a new house in 2021. And you can really see, because of that long backlog, into 2022 is when you're going to start to see the sales growth go to the double digits as they catch up on this backlog. Now, looking at the earnings, we see some earnings growth here into 2021. It is going to be hard to cycle over last year, which was a strong year despite the month and a half of the initial pandemic shutdown, where, yes, they were still building homes during this time, but most of the sales centers were, if not closed, only partially opened, things like that. And they have transitioned now to the ability to sell more online. So now that we've had another severe outbreak of the coronavirus, they are prepared to just sell you your home online, and buyers are buying online. So we'll see improvements in both the sales and the earnings despite this second outbreak versus the last time when it was new to everybody. But you can see the earnings, just that 5% earnings growth for this year. But again, in 2022 is really where you're going to see the big change as they catch up with that backlog and they're able to deliver the houses. Now, looking at it on the chart, here you'll see things have been kind of stable for what earnings have been doing the last couple of years. They weren't in the down cycle. The down cycle ended in 2012 for the home builders after the housing bust, but it was kind of just going along, waiting for some kind of demand and waiting for these millennial buyers to jump in and really start buying homes. And then the pandemic was the catalyst for a lot of people to decide, hey, I need to get into something better that I'm more comfortable with, especially if I'm working from home or my kids are going to school from home. We need more space and certain configuration. And then we had the record low mortgage rates. So as you can see, the earnings are really turning around here. You can see on these two little lines here, starting to see the 5-year highs if we get that in 2021. But the analysts are bullish that we are going to start to see these record earnings for the home builders going forward. And then switching over to how the stock has performed, yes, it's bounced off those coronavirus lows. So this is the 2-year chart comparing to the S&P 500, was mainly moving kind of in line with it, but 2020 did start off pretty hot for the home builders because demand was already there before the pandemic hit. And then we really have seen the home builder demand surge. Now here over the summer, you can see the stock kind of entered into this narrow trading range, which it still kind of is in despite the big beat on both earnings and revenue in the fourth quarter here that got a little boost to the stock there, as some people and especially traders, investors believe that maybe mortgage rates could rise into 2021. That could put a damper on, or a lot of the demand is being pulled forward, and that will put a damper on what home sales are doing. But nothing has changed in what the home sellers are saying out there across the entire industry, both the builders and the brokerages. There is still not enough housing and too many buyers, even here in the winter season, which is the off season. But what will happen in spring? There's going to be a lot of home demand in the spring, and those millennial buyers are a multi-year trend. It's not like there's not 20 years of millennials, and many of them have yet to buy. They're forming families, they're entering into peak home buying years, which is in your 30s now. And so that will take several years to play out. And as well, it'll take several years for the home builders to catch up. So Lennar, even though it's up big this year, is still a cheap stock. It has a forward P of just 9.8. Yes, that's in the single digits. And because those earnings estimates are on the increase after that great fourth quarter and full year 2020, the analysts are bullish about 2021, obviously, and so is the company. It's got a great PEG ratio too. The PEG is just 0.86. And remember, any PEG under 1 indicates value. It's got both growth and value. That's a rare combination, especially in this market where there's not much value to behold. So this is a rare stock. It's got the value PE. It's also got the PEG under the 1, which is the growth and the value, and it's got the Zacks #1 rank, which indicates those rising earnings estimates. So this is the real deal, but you're not getting much love from Wall Street right here, as a lot of these home builders keep treading water. But we'll see what happens in 2021. This is when the cycle will pick up in the spring. It always does. Take a look right around the Super Bowl. That's when spring home buyers surge back out there, if they're not already out there right now. But this is the story to watch for 2021. And now I'm going to turn it over to my colleague, Ben Rains. He's got a super hot Zacks #1 strong buy stock too, but it's not in the quote unquote boring area of the home builders. It's in a hotter area, and he's here to tell you all about it.
Thanks, Tracy. Today, I'm going to take a look at the Trade Desk, which trades in the ticker TTD. The Trade Desk is a programmatic advertising company built for the digital era. Trade Desk cloud-based platform enables clients to create, manage, and optimize data-driven digital ad campaigns across a range of channels and devices. This helps them reach people on websites, streaming TV services, audio apps, and nearly everywhere else. This is key as people disconnect from legacy media. So that's everything from Spotify to Netflix. For instance, digital ad spending surpassed traditional media buying in 2019. On top of that, the digital ad market is projected to reach $225 billion by the year 2024 in the US alone, up from $150 billion this year. This gives Trade Desk plenty of room to expand, and marketers need to be able to reach consumers beyond the traditional Google and Facebook. And let's also not forget that those tech giants are under heavy scrutiny at the moment. The Trade Desk beat our Q3 estimates in early November, with sales up 32%. This marked a strong return to growth after it fell in Q2 as the global advertising industry took a big coronavirus hit. Zacks estimates now call for the company's Q4 sales to jump another 35% to help lift its adjusted earnings by 27%. Peeking further ahead, the Trade Desk's overall revenue is projected to jump by 22% this year and then another 34% in 2021 to hit $1.1 billion, with its bottom line expected to climb 20% this year and then climb again in 2021 as well. All of this positivity has helped the stock soar to new highs, which actually hit again on Monday morning before falling as the market took a bigger dip on some bad coronavirus news in Europe. The stock has also soared 100% in the last 3 months alone. This is part of a 250% climb over the last year, and the stock has really skyrocketed since its 2016 IPO. We should also note that the Trade Desk strong bottom line revisions help it earn a Zacks rank #1 strong buy at the moment, alongside its A grade for growth in our style score system. That said, it certainly is a growth stock based on its valuation. But in the end, investors might want to consider the high-flying trade desk as a bet on the ever-growing digital ad age that requires more ingenuity than ever, as consumers need to be reached across an endless array of digital devices. So that does it for me, but we should also make sure to check out our new Zacks.com/promo page, where this week you can check out the book from our CEO, Kevin Matris, who has a book on finding number one stocks.